Ladies and gentlemen, good day and welcome to Allied Digital Services Limited Q2 FY2024 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and anyone who wishes to ask a question may enter star and 1 on their touchtone telephone. To remove yourself from the question queue, please enter star and 2. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Mayank Vaswani from CDR India. Thank you, and over to you, Mr. Vaswani.
Thank you, Zico. Good afternoon, and thank you for joining us on Allied Digital Services Limited's earnings call for the second quarter of financial year 2023-24. We have with us on the call today Mr. Nitin Shah, Founder and CMD, Mr. Nehal Shah, Executive Director, Mr. Paresh Shah, Global CEO, and Mr. Gopal Tiwari, Chief Financial Officer. Mr. Nehal Shah will cover the recent developments, followed by Mr. Paresh Shah, who will then cover the operational performance and order wins, followed by Mr. Gopal Tiwari, who will walk us through the financial highlights. Thereafter, we shall open the call for the Q&A session. Before we begin, I would like to point out that some of the statements made in today's call may be forward-looking in nature, and a disclaimer to this effect has been included in the earnings documents that have been shared with all of you earlier. I would now like to hand over the call to Mr. Nehal Shah for his opening remarks. Over to you, Nehal.
Thank you, Mayank. Good afternoon to everyone. Thank you for taking the time to join our earnings call. I trust that all of you have had a chance to review our earnings document, which was shared earlier, including the investor presentation. I will start with a key development this quarter, which is a certification received from the Great Place to Work Institute. We have always followed positive people practices and have taken care to offer employees an engaging platform for growth, which is reflected in the attrition rate that was meaningfully lower than the industry. The certification by Great Place to Work Institute validates our practices. I am sure this will help us to continue to attract the best talent at Allied Digital. The certification from Great Place to Work is indicative of the progress that is being made across the organization. As we have shared earlier, there is a holistic transformation underway across ADSL covering functions such as service governance, customer support, human resources, to name a few. The endeavor is to graduate the company into a higher orbit with larger size contracts, addition of high-profile customers, and a clear right to win in our businesses due to competencies and capabilities. The outcome of this transformation will be greater scale and enriched margin profile, high return ratios, and greater value creation for stakeholders. We will continue to share our progress on key developments supporting this transformation each quarter. As we have shared earlier, we offer a wide range of services with a focus on managed services for global enterprise customers, as well as being a master system integrator. Our service capability matrix includes infrastructure management, cloud enablement, cybersecurity, integrated solutions, software services, and workplace management services. While providing services, we integrate the appropriate building blocks from a service capability matrix to create customized service offerings which ensure that each project receives the required skill set for successful execution. Starting last quarter, we restructured offerings into two distinct categories, services and solutions. Under the services bucket, we focus on providing continuous long-term support to our clients. These services are of an annuity or recurring nature, while clients engaging in ongoing contracts to receive consistent and reliable assistance. On the other end, under the solutions category, we deliver one-time implementation tailored to address specific needs or challenges faced by our clients. These projects could include transformative initiatives, upgradation projects, or setting up infrastructure at the new locations. We derive 70% of our revenues from the global customers through our rest of the world operations, which are dominated by a presence in the North American market through a subsidiary, Allied Digital Services LLC. Around 30% of our revenues are from India, where we serve enterprise customers as well as government customers. This provides us with a natural hedge, as we have seen some macroeconomic challenges in the U.S. market for the last 2 quarters impacting the growth from that region. However, the India business has been delivering robust growth, which is around 53% higher in quarter 2 or on a year-on-year basis and 62% higher for the half year. In that backdrop, I will briefly touch upon key aspects of our performance. In quarter 2, we reported revenues of 170 CR, an increase of 2% on a year-on-year basis. This, we believe, has been a resilient performance in the face of temporary macro headwinds. While the overall opportunity set remains attractive and we continue to pursue large deals, there is a slight elongated cycle of evaluation due to macroeconomic condition and pressure in the IT sector globally. Secondly, on EBITDA, I am sure that all of you have noted the progressive increase in EBITDA from quarter 4 23 to quarter 1 24 and a further improvement this quarter as well. We have indicated our focus on higher value and more remunerative contracts as well as multiple actions and initiatives to drive margins higher, and we continue to demonstrate progress in a positive direction. Importantly, we remain highly excited about our growth prospects. We continue to engage with marquee customers and discussions are centered around leveraging deep capabilities to drive their IT transformation objectives. There are large contracts and the pipeline is very solid. Our focus will be to convert this into contracted business at the earliest. Now I would like to hand over to our Global CEO, Mr. Paresh Shah, to share key insights about the operational and key developments during the quarter. Thank you.
Thank you, Nehal. A very good afternoon to everyone. I will now briefly take you through the operational performance and key developments of the company during the quarter. As Nehal had mentioned, we have a very strong pipeline, and that is making us very excited of the opportunities that are coming through. However, the contract evaluation processes, the cycles are getting slightly stretched due to macroeconomic factors, and the addition of new customer is taking a bit longer than anticipated in previous quarters. Amidst the backdrop, we have added around 142 crores of new contracts this quarter. This includes, let me walk you through the India contracts first. Allied Digital Services Limited proudly announces acquisition and operationalization of a contract from Adani Wilmar Limited, a leading FMCG company in India. The multifaceted agreement involves the delivery of business services, infrastructure management, and operational management services with a primary focus on enhancing infrastructure deployments as well as automation and governance of seamless IT services. Furthermore, ADSL has secured a substantial 3-year contract from Coromandel International spanning data center support services, workplace management services for their corporate offices and plants across India, including the management of 750 retail stores. Third, I want to highlight one more opportunity, significant achievement in a multi-year contract with SBI Life Insurance, a joint venture between India's largest bank and a prominent French financial institution. This agreement entails providing 24/7 IT managed services to support the critical infrastructure and application. Let me also quickly go through some master system integration projects for smart cities. I will give you some updates. As you know, we have been working last quarters for 5 smart cities actively. One is the Lucknow project, which we have completed phase 1 and has gone live. Proud to say that more than 500 cameras and 120 buses are already updated with the latest technology, and obviously the data center and command center is complete. The Solapur project, again, the command center has gone live and operational. These are both very proud moments for Allied Digital. The Punjab smart cities, also the work is in progress. The data center for the 2 smart cities is already completed. The cloud setup is also 75% complete. I also want to highlight that all our smart city projects have 0 penalty on all our services that we are doing. Today, I want to also add, we have added a lot of logos on the enterprise managed system integration projects, such as Lodha Group, the Tata Motors Group, the Vedanta Group. This just makes us proud about this. Let me go back to the international operations, and I wanted to highlight that we are excited to share 3 new contract wins this quarter. The first is a large real estate firm in Midwest USA, which includes infrastructure managed services, cyber security, digital workplace services, cloud support, and ADAS platform. A central US-based bank for digital workplace services has also awarded us a 3-year contract. A large energy company in Northeast USA has engaged us for digital workplace services. Our contract with Spark Group, as we mentioned last quarter, is progressing very well. At the same time, we are implementing new scope of work as scope gets added into new technologies such as AI and cyber security. in fact, we continue to see more enriched scope of work coming to us from this large group, and customers are seeking deeper and more complex solutions across the emerging technologies. For those of you who have been following the company, you would know that we have been strengthening our partnership with large IT services firms and global consulting firms to jointly serve customers. Through these partnerships, there have been a significant inflow of new customers, and that's why see a very strong pipeline, including several managed large marquee global names. Having built a richer client base and for the last 2-3 years with a more elaborative track record, we are now also re-emphasizing on our direct channels for sales and marketing. These will be leveraged more comprehensively to add new business. Now, I want to hand over to our Chief Financial Officer, Mr. Gopal Tiwari, to cover the financial highlights for the quarter under review.
Thank you, Paresh Bhai. I'll now quickly cover the financial highlights for the period under review. In Q2 FY24, our consolidated revenue reached rupees 170 crore, marking a 2% growth from rupees 167 crore in Q2 FY23. The EBITDA for quarter stood at rupees 21 crore in Q2 FY24 compared to rupees 26 crore in Q2 FY23. The EBITDA margin was steady at 12% as compared to 15% in the corresponding quarter last year. Here it is important to point out that the base quarter had slightly elevated margins due to reversal of provisions made earlier. As Nehal pointed out, we have progressively improved our EBITDA margin from 10% in Q4 FY23 to 11% in Q1 FY24 and further to 12% in the current quarter under review. We have shared that our aspiration is to get the EBITDA margin towards the mid-teens level and are actively working to ensure the improved margins levels in the quarters ahead. PAT for Q2 FY24 stood at rupees 12 crore as compared to 18 crore in the same period last year. While our revenue grew by 1%, our EBITDA grew by 17% QOQ basis with a margin expansion of 100 basis points. PAT grew by 34% on quarter-on-quarter basis. Looking at the half-year financials, our revenue was rupees 339 crore, a 6% increase from rupees 320 crore, and EBITDA stood at rupees 38 crore as against rupees 39 crore in H1 FY23. H1 FY24 PBT stood at 8% compared to 10% in H1 FY23. PAT stood at rupees 20 crore as against rupees 25 crore in H1 FY23. Now turning to some insights in our quarterly performance. Firstly, our India business witnessed a 53% year-on-year growth, while the global business contributing around 2/3 of revenues faced a softer quarter. We anticipate a resurgence in activity level in H2, expecting increased wins and deliveries in the coming months. Allied Digital maintains a robust balance sheet, being a debt-free entity on a net debt basis, reflecting our prudent financial management and stability. Additionally, we have carefully managed capital expenditures with no significant capex spend during this period. We also hold a cash and cash equivalent position of around rupees 99 crore across international and domestic operations, providing the necessary liquidity and flexibility to meet operational and strategic requirements. Our debt has remained stable, and with the further increase in cash and equivalents on a net basis, we are a debt-free company and are well positioned to invest for growth. All of you would have noted the further improvement in DSO days for the half year. This has been a key focus area for the last 3-4 years, for which we have expanded significant effort in order to streamline this. At 87 days for H1 period, we are now at par with the industry norms, and the impact of our initiatives is visible on the improving ROC profile and stronger cash generation. With this strong financial foundation, we are well prepared to seize opportunities, invest in growth initiatives, and consistently deliver values to our stakeholders. Now, I would hand over to our Chairman and Managing Director, Mr. Nitin Shah, for his remarks.
Thank you. Thank you, Gopal. Very interesting. I'm sorry. So I will try to take you on a larger picture and the background. So we have come a long way after 40 years. We have made the company completely relevant and ready for the future challenges, which is quite different than what it used to be 5 years. And more rapidly it's changing. And in that process, the new technology is going to disrupt the entire world. In all businesses going to get disrupted further with after Web 3.0, which is going to become very popular, where AI is going to be completely, it's like a norm, basic it will be by default AI will be there in Web 3.0. Now, in this scenario, plenty of opportunities which are going to be coming towards us, and we have made our company so robust on all kind of services to ease out the right kind of skill set. We have aligned them on the cloud skill set. So there is major impetus which is going to be there on both AWS cloud and Azure cloud of Microsoft. The second skill set we have developed huge is in terms of cyber security, because that's going to be the fastest moving area in the world, where people are, there are plenty of new threats which are coming up, and we are in a position to stop or, intersect that exactly on the right time on real-time basis. So cybersecurity is going to be our major focus. Third one is, of course, when we talk about, we have aligned our large force in terms of people towards smart city. As you know that we have done almost more than 12 smart cities, and that's our expertise which is proven in this country. We built several command and control center, data centers. It is a kind of a real good case studies involving all kind of technology, including IoTs, cloud, virtualization, video intelligence and all. So I think that's our forte. Plenty of projects we are refusing, because if we find some risk in that project, being a government, we do not touch that. And we are only going for one which we feel is ideal for us. So that is something which now has become very, very matured service. And I wouldn't be wrong if I say we are the market leader. The fourth segment, which is our NOC and SOC, it has become too, strong in our company, whereas we are at par with any large company that you compare in terms of practices that we are having. We have improved our service governance a lot, and that's why the large companies like Accenture, PwC, Infosys and all, they are using our company for delivering their customer services. And I'm very proud, because my entire 47 years of experience has gone only in IT services, and today's IT services is quite different than what it used to be in those days. Then the next one comes is very interesting for us, is that we have created several skill sets on our software division, and we have created two patented software platforms. One is our Editas, which has which is getting a lot of success everywhere across the globe, and some of the large players have standardized on our Editas, which is now not just about service platform, but also it involves a lot of automations which are built in that, and also conversational technology. The future is going to be conversational, because nobody has got time in this fast world to key in everything onto the either mobile or on your desktop or laptop. You need to just talk something and then you will get the result. And that's something which is getting adapted rapidly, and we have taken a stride on that. So even banking, we have created a banking software which is known as a Fino Allied, which is completely voice enabled. It's not voice enabled. It's a conversational technology that we have used. So more than 60 services that you can do just by speaking onto the mobile, and your entire transaction will be taken care of. The last one which we are talking about, where we have invested a lot, is the workplace management, where we feel there are very few companies who have got that kind of presence, footprint that we have got. So today, as you know, that we support 72 countries, and some of the countries like all the European countries, UK, US, Canada, then you talk about Singapore, Australia, Japan, China, Brazil. We have our own direct forces, and that's the attempt which we are going to do that. And very soon we'll add a couple of more countries, and the countries where we do not have presence, we use partners. And the idea is to make sure that we go direct in most of the cases, that the partner margin is getting eliminated, so we increase our profit margins or ability to acquire new customers. So these are the things that we have put in place, and I'm very confident the growth is going to be very robust. One thing I can tell you, with so much of skill set and the strength that we have got with 3,500 people, I don't think so. And at our size, or rather I would say positioning is so strong, but we are highly underrated company. You will not find anywhere in the world. So I would request you to look into our company in more micro level and see how we perform. We have changed completely in last 6-7 years, and we are in the path of fastest growth. Thank you.
So should we begin the Q&A session?
Yes. Before we can open the floor.
Yes, sir. Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the stone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Gaurav Agrawal from 9-1 Capital. Please go ahead.
Thank you for the opportunity, sir. Sir, in terms of your revenue growth, how do you see the rest of the year and, FY25? And if these large deals which you have been referring to, if they come on board, then what could be the revenue trajectory? If they don't, then what could be the revenue trajectory? If you can just paint some kind of scenario
to us. Mr. Agrawal, may we request you to use your handset, please? Your voice is muffled, sir.
Is it better now?
Yes, sir. Please go ahead.
Fine. Hello. I think I have understood your question. Like we said in our last quarter call also, we are very, very focused on our 2025 numbers and the revenue targets that we have given in the previous call as well. We stick by it that we are looking at closing to the 4-digit top line by the year 2025. And we would want to continue to be on that. Our large deals that are there in the pipeline, which are almost on the verge of closures, some places further negotiations, or there are some delays that are happening due to the overall macroeconomic in the U.S. But however, the pipeline remains strong. New requirements are coming in, and we are very, very excited about the next 3 to 4 quarters that are going to be coming up.
Thank you, sir. So the line for Mr. Gaurav has dropped. May we move to the next question? Our next question is from the line of Jyoti Singh from Aryan Capital Markets Limited. Please go ahead.
Okay, thank you for the opportunity. Sir, my question is on the employee cost reduction side. That is sequentially almost 8% down. So if you could elaborate on that, then I will ask my second question.
Yeah, I'll answer for that. See, the 8% reduction is mainly on account of being last quarter being the first quarter of the year. A lot of revision and appraisals happens, and some arrears are also paid. Variables are paid to the employees. So it is mainly because of that, and there are some reduction was on account of ESOP hit. So both things put together, this quarter we have got a better numbers for employee cost.
Okay, and sir, similarly we see some of impact on other expenses, or this is because of some other reason?
That is cost optimization and better cost control. I mean, it is mainly because of that. We are, as we have earlier also said, that we are always on the path of improving our margins. So one of the tools for that is to cost optimization and cost control. So those things are also in place. So that is being reflected in this quarter also.
Okay, thank you, sir. So, sir, following to my previous question only, like, are we on track on the hiring side, or we are, utilizing earlier employee that we hired? If you can elaborate on that.
Yeah. So our hiring strategy is absolutely at place. There is always a bench that we keep for our future projects that we want to, or that we envisage is in the pipeline are going to be closed. So, and there is a constant reskilling and upskilling also that keeps on happening at our side. So whenever a person who has just got free from any project will be put into the reskilling training room, I would say. And then from there, we will keep him ready or on bench as soon as we get a new project to be deployed over there. So it's a standard practice which is being followed across the IT industry.
Yeah, just to add to what Nehal said, training is going to be key focus for us in coming immediate quarters. The reason being, we see a lot of big pipeline, especially in a lot of new technologies, especially cybersecurity and cloud and also AI. So we definitely encourage employees to take cross-tower trainings, learn more and more broader technologies. And this is definitely, as we see the pipeline being strong, we would be quite, keen in making sure that people are well equipped. And obviously, talent acquisition is very important, and we are making sure that we are expanding our horizon to kind of make sure we can manage the pipeline requirements that is there.
Okay, great. Thank you, sir. And sir, follow up on the order book side that we have seen improvement in this quarter. So we are seeking guidance on how this trend is expected to shape up for the full year. If you can guide us.
Yeah. So on the order book side, this is Paresh here. As we see a kind of a positive trend going quite up. If there are some large deals, if they materialize, obviously the order book will be really spiking up. So right now we definitely see continuous growth. As you know, our order book comprises of two things. One is the contracts we have already won. So that is one aspect, and obviously the contracts which we are going to win, which are some large size contracts. So we see pretty much a positive spike coming in the order book.
Okay, thank you, sir. And sir, last question on the smart city side, we totally had done 12. So any target on that front?
Yes, so I just quickly gave an update on the recent 5 cities that we are talking about. So we are moving very good. We finished some major milestones on these projects. The last 5 months being Lucknow Smart City, Solapur Smart City, and 3 cities in Punjab. So we achieved the phase 1, which was a very big phase for Lucknow City. The command center, the operational center has gone live. Same thing for Solapur, the command center has gone live. We are already entering the phase 2 of Lucknow. Also, the 3 Punjab cities, that is also the data center is already complete. The cloud part is already complete, 70-75%. So we are doing a great progress in delivering those smart cities also.
Just to add to what Paresh said, I would just add to say that there are a lot of other smart cities that are going to be coming up in the pipeline from the government of India in the phase 2. Which we are expecting the announcements to come in the first quarter, and we might be bidding for many of them. So the first smart city which came, the project was of 100 smart cities. This time we are seeing or hearing that they are going to be taking up 300 or 400 more smaller cities where they will be doing similar kind of projects. So there is a huge scope and potential that we see in the coming year. Maybe this could be announced near the elections, sometime near the elections. Lok Sabha elections. That's how it is.
Okay, great. Thank you, sir. I will come in.
Thank you.
Thank you.
Our next question is from the line of Gaurav Agrawal from 91 Capital. Please go ahead.
Yeah, sorry, sir, my call dropped. So what I was asking is the revenue trajectory for the remaining 2 quarters and for FY25. It provided the deal which you have been having in the pipeline, please fructify, and in the case if these deals doesn't come through in the next 6 months to 1 year.
So thank you, Gaurav, for that question. So Gaurav, we are very, very excited and happy that we are seeing a lot of progress happening on the deals that are there in the pipeline. Of course, the progress which we had anticipated and would have happened in the last 1 or 2 months is going a bit slow, but the progress is in the right space. The only thing is that what we are waiting for is a final go ahead from the customer side, and which we feel should be happening in the next 1 or 2 months. If that happens, of course, the growth trajectory is going to be huge. Supposedly, for some reason, it doesn't happen. We are still sure that we will be growing with the additional business that are coming in the pipeline. Of course, the large projects that we are talking of will give us a huge growth potential. But however, the other projects which are also there in the pipeline will give us a steady run of top line that is happening.
Okay. So, sir, in the second case,
There is no particular one project that I'm talking of. These are multiple projects that are there in the pipeline.
Right.
The large contracts that we are talking of. So one of them should materialize very soon, is what we are looking at.
sir, any base case growth that you are targeting for this year and for FY25?
So, FY25, we have still kept our targets very high. We have already given that in the last quarter call also, that we want to intend to go by 25 or mostly by FY26 to be in the 4-digit top line. Okay. That is what we are looking, and we feel that is achievable still.
Okay, and sir, once we reach that stage, so will we be again at 11-12% kind of EBITDA margin company, or those EBITDA margins can also inch up?
So generally, when the top line grows, there is a lot of possibility of optimizing the cost, and we are sure that our EBITDA margins will also keep on improving as we move forward in that zone. Because your other fixed costs and other costs will not drastically go up. They will all be going in a linear manner, but this growth will give us a lot of cost optimization opportunity.
Okay. And sir, just on these pipelines which you have been referring to, whom are we competing these against, and when the customers are taking a decision on these deals, is the discussion more on the scope of the work or more on the pricing side? One way is that maybe they are concerned about the pricing on their macroeconomic environment. The other would be just that they are discussing the scope of work, and that is what taking longer time.
So I would just say the scope of work and all is closed. What is happening is that because of this uncertainty things that are happening, people do not want to go in for a change very easily. They are just delaying taking the decision of when they have to change. Just to tell you that I will not be able to name the thing because we are under strong NDA, but we are working with large 4 IOP players to compete and win. So one of them is our partner, and we are competing with the rest of the 2.
Okay. Great, sir. All the best for these deals, and wish you a very happy Diwali.
Thank you, same to you.
Thank you. Our next question is from the line of Darshil Pandya from Finterest Capital. Please go ahead.
Hello, sir. Am I audible?
Yes,
sir. Please go ahead.
Yeah. So the first question was in the editors, which we discussed in the month of September. So you said that you will be soon, launching this version 6 of editors. Any update on that? Have you?
Yes. So we are already having a lot of traction for the version 6 because customer is very excited in moving a lot of things into AI. So we are already launched the 6.0 beta version where we are talking about conversational AI being added on top of editors, which gives them tremendous capabilities to do automation of their processes. So we are already doing a pilot with 2 customers already. So that's how we are moving very fast on editors to make sure that, we make it into production very soon.
Correct. So as you said, you are still confident of, taking this separately as a segment in the next 3 to 4 quarters?
Yes, absolutely. Yes, because it is now, crossed over 100 plus customers where Editas is being used direct and indirect. And we see that as a major traction. And as we have adopted AI as a part of this, we feel very confident that, this will become a major channel of our business in coming years.
Correct. And in regards to Sir TAS, you said that, last time you said that you are targeting some regional rural banks for this. So have we got any, anything on that? Have we added a bank or?
Yes. No, we are still in processes. We have also, for getting those banks, still the conversations are going on for mid-sized banks. At the same time, we were leveraging this platform not just for now banking. We are going to do a cross-leverage to a lot of other sectors also, including HR and finance. So we are also taking this platform to a lot of other opportunities, including cybersecurity. We have integrated that. So bank is one avenue, but the same platform is being used for multiple, industries now. So that's a kind of major achievement that we are doing, on the conversational AI.
So when can we expect this, changing into numbers?
Yeah, so that's why we are broadening the conversational AI platform. And this is where we see very soon, we are already doing 2 pilots also. We are excited about it that we should convert this into major wins from the next year. As I mentioned in my, discussion also in my topic, Spark Group in the US is very excited about this. We have demonstrated that, and they are very keen to take it into the retail industry. to make sure we can customize a lot of automation for their business processes. So we see good traction. It is a matter of time how we kind of build this fast and make sure we make successful pilots with them.
Correct. And sir, on the last question was on the Finolide, where you are expecting some strong momentum. So there you said that you're also looking to target the banks, as the top 5 banks are already they have already deployed this system. So what's the progress on that?
So just focusing on the banking sector per se, since we have now more BFSI segment customers, we feel more confident to take this forward. But yes, we still have to see the success into that.
So what has happened is become a chicken and egg story. It's like who wants to get the bell, who wants to be the first one. So there are multiple discussions going on, but the question comes that if you have a reference that you have deployed this anywhere, please do come back to us. So we are just figuring out, and we have now gone ahead and even told that why don't you use that as a pilot and use it for free for 6 months and figure out how the usage is. So there are breakthroughs that we are hoping, and I think it should happen soon. Maybe by the first quarter we should be going there.
Okay. And since we have this existing relationship with a lot of our partners, for example, Infosys, Daimler, and all this, have you got any new business from this client? Or have you added a new clients? And if you can name any?
We basically are working very actively with all customers. So every partner we are adding business across the globe, whether it's Infosys or PwC or Deloitte. So there's a lot of momentum on that. In fact, PwC has signed off on our Adidas platform, and they are taking to our customers, their customers across the globe. So significant movement is happening with the partners.
Got it. And there are certain deals that we have already closed this quarter with some of our partners.
Yes.
The pipeline is very strong with partners. As we said earlier also that in the US market, we generally typically work as a tier 2 partner to some of our large IOPs and other players. Most of the deals, even the announcement that we have done today and the number that we have given, large portion of that has come through our partners.
Got it. So one final question. Since you said on your opening remarks, what was the contract value that you have won for this quarter? I guess it was 143 crores or something?
Yeah, 142 crores.
Yeah, 142 crores.
142 crores of orders that we have won for this quarter, right?
Correct.
Yes.
All right. Thank you so much, sir, and all the best for the next coming quarters. Thank you so much.
Thank you. Our next question is from the line of Raj from Arja Partners. Please go ahead.
Hello.
Mr. Raj, your line has been unmuted. Please go ahead.
Hello. Yes, now I'm audible.
So may we request you to speak a little louder, sir? You're not audible.
Hello.
Yes, sir.
Now
Thank you.
fine?
Please
Yeah.
go ahead.
Hello. Am I audible now?
Yes, go ahead.
Hello.
Mr. Raj, you
Raj,
can go ahead, sir. We can hear you.
Raj, we can hear you. Please go ahead.
How much is the outstanding order book as on Q2 end?
Once again, outstanding what?
Outstanding order book.
Outstanding order book.
Yes.
Around 1,600 plus order book is still outstanding at this quarter end.
And how much is the executing time for this?
3 years on an average, around 3 years period.
Okay. Achha, so we can expect out of the 1,600 crores, around 270 crores to be executed in HY2. Is it right?
So just to answer that, order book is something which is typically doesn't give the actual, as I had said in the previous call also, which doesn't give the actual outflow of our top line, because order book comprises of the orders that we have won, but it does miss out on things that we are doing farming. So there could be extra farming that we are doing. Sometimes we get orders of confirmation for 5 years. However, we get the PO yearly. So the order book which comprises doesn't account to all of these numbers, because it becomes really difficult for us to come up with a number. So I would request that if you could not just add the 1,600 and divide into 3 years or 5 years and then come out. So the reason behind that is that because we are in a slightly different model. It's not that I will be able to give you a number that we get on a day one, and you just divide it by 5 years or 4 years. We are typically in a business where things keep on changing quarter on quarter. If we keep on winning, if there are renewals happening, there is more farming happening where we are
dynamic in nature.
So it's a little dynamic in nature. So coming up with a number and then dividing it by 3 or 5 will not actually give us
that will not be fair.
The actual
Okay. Understood.
So
overall,
we are not the way IT world, it's not a typical FMCG or EPC company that you have a standard, because as Nehal mentioned, when we have order book, these are on services, but a lot of projects keep coming with the customer on infrastructure enhancement, transformation, cloud stories. So that is an all incremental revenue that is expected from the same order book added to that. Okay. So that's a very key factor, because those projects are just ad hoc projects keep coming, and that adds to big revenues. The other thing is a lot of spikes that we get either from the smart city projects or from winning very large deals that completely kind of shoots up the order book. This is the base that what we're talking about.
All right. Understood, sir. Thanks. And also, in HY2, in half year 2, can we expect the execution to be good then compared to H1?
Yeah, from the execution point of view, as you know, we are continuously into making sure our delivery becomes, because always we are making sure that our profit margins improve, right? So that's very key. And for that, there are a few areas of risk that we want to tighten it as from the macroeconomic factors, whether it is training, making sure that people are not on the bench, so cross-train them to do many things. Okay, we deploy shared services, as you know, at a lot of our large projects. So what happens is the efficiency just increases as more and more projects come. Okay, and we are able to kind of cross-train and add them. The other risk we do is making sure that the employee performance, that's a very key thing that we focus on to make sure that he gets to deliver 100% of the work that he is doing. And the third is obviously making sure that the profitability continues to improve. So that's very important for us to make sure that our cost of delivery is either remaining constant or being less. And as we scale more, definitely the EBITDA is going to improve on that. So that's how we see it.
Just to add to what Paresh said, second half of the year is generally very, very active, and we keep on onboarding a lot of customers, and there is a possibility that the top line and other things will also keep on going up. Most probably the last quarter is always heavy, where a lot of budgets are getting used for, and then that's when we get a lot of one-time projects as well. So we see that trend would continue in the second half of the year. And the other contracts that we are talking of, if we hit them, probably we could get some revenue coming in the top line in the last quarter as well of this financial year.
All right, understood. All right, sir. Thank you so much.
Thank you. Our next question is from the line of Sanjeev Kumar Damani from SKD Consulting. Please go ahead.
Namaskar, sir, and my respect for the promoter of this very fine company, and current management is highly appreciable for taking this company step by step to the higher achievement. Am I audible, sir?
Yes. Thank you. Appreciate your feedback.
Thank you, sir. Sir, actually, I was just, a lot of things have been clarified. Of course, I'm very new to this company. So, sir, I was just wondering about the balance sheet. Investment properties is one item of 77 crores shown. So, are we intending to realize it in days to come?
So, sorry. We had identified a few places, especially Hinjawadi. When we were growing in the first phase, we thought we would be reaching more than 10,000 people so soon. And hence, what I thought, probably the rate of construction is not increasing as much as the land cost is increasing. So we have taken 7-acre land in Hinjawadi, which is yet to be utilized. 2-acre land we have taken in Talewadi, right opposite to this Fujitsu. And in that area, Capgemini is also there, Atos is there. And there again, we have a plan to create our own data center there. But we have just kept it as a as a option, whenever we need to use them and when we grow. So that's the kind of investment that we have done.
So sir, this entire investment properties is reflected through the land that we own today and not the buildings and any other thing.
No. So land is one part of it. There is a building at Navi Mumbai which is right now currently being used as a delivery center. We have got other offices at SEEPS which are also being used for our delivery to global customers. And we have an office at Nariman Point, which is, of course, our corporate office from where we all are right now currently working out of. And we just also invested in Calcutta. So in Calcutta also we bought an office for our expansion. Typically the building that we have in Mape is about 56,000 square feet. The office at SEEPS is about 20,000 square feet. And I think that are the kind of requirements that we would be wanting to have with us for the growth that we see, the demand that we see, so that we don't have to run and spend money on acquiring real estate on rental purpose.
Okay. Thank you, sir. I am satisfied. Sir, one thing is regarding trade receivables, which is now 133 crores on consolidated basis. So these are all open credit that we give to our client, or it is supported by some sort of guarantees?
No, these are mostly open credit given to our enterprise customers and government customers also.
Okay.
So there's no.
But most of this outstanding that we see is coming from the Allied LLC, because those are large customers where the revenue or the billing that happens monthly is also on a bigger number. So,
sir, we have learned the hard way in our journey, and hence we become extremely cautious, and we don't touch those clients. If you see the kind of clientele that we serve, these are all globally top clients. We don't serve SME client as much.
Yeah,
so we are very clear. We will not take risk.
Very happy.
Like we've already mentioned.
Right.
Yeah. The client profile that we mentioned is also like Adani or Tata's or Coromandel of the world. Are all big conglomerates. Yeah.
Very happy, sir. Very happy. One more thing, sir. Equivalent of cash, 91 crore is some sort of FDs or something like that, or some other form of undies that we have received from our client. 91 crore is there in cash.
Yeah. This comprises the combination of overseas cash in hand and domestic company also. So in domestic company, mostly that amount is in form of margin money given to the bank in form of FD against the bank guarantees given to our customers. And other amount is lying some in the FD form, some in the current account, just to take care of our eventuality in case sudden requirement of working capital or to cater to our customers. So it is a combination of both, you can say.
Okay. And sir, there are two items of current assets, 55 crore in current assets, and non-current assets are also 41 crore. So largely maybe provisions or something like that, or some realizable value is there in that. Other current assets are some 55 crore.
It must be realizable, but I cannot give you answer on that off the cuff. I'll have to come back to you. You can share your mail ID. I'll share the details.
No problem, sir. Thank you very much, and all the best to you, sir. And we look forward to your continuous growth in coming days. Thank you, sir.
Thank you. Thank you so much.
Appreciate it.
Thank you. Our next question is from the line of Janice, who's an investor. Please go ahead.
Good morning, sir. Is my voice audible?
Yes.
Yeah. Yes, sir. May we request you to use your handset, please? Thank you.
Hello. Is it better now?
Yes, sir. Please go ahead.
Yes.
Yeah. Continuing the previous question on cash in hand of 91 crores. So why are we not able to see any other income against the FDs that are there?
No, it is there definitely, but it is there are some other exchange loss is also there in that other income. So it gets set off.
Yeah. So most of this
is the net amount. Other income, you are seeing the net amount. The income and expense both are netted off, and then balance amount is shown there.
So we have kept certain war chest money for acquisition. You may hear very soon. We are constantly looking at something.
So entire amount is not in form of FD, as I told you. I mean, the portion of that amount is in form of FD, which is lying with the bank, and margin money. Rest of the amount is lying it's not earning that much.
So I'll tell you the reason behind that is that most of the amount which is lying with us is currently in the US. And as we all know, the US FD rates are not equivalent to the India FD rates. That is the reason you would not be seeing a large interest in incoming interest on it.
Right. Digging it a bit deeper, what kind of losses or expenses are that you have mentioned as written off against that income, number one? And I missed the part that are we looking for some kind of an inorganic opportunity as well?
So inorganic growth opportunity is always there in the eye. There is nothing that we have straight away on the table, but we are constantly in the view of looking at companies which are of a size which is digestible by us and which are in the line of business where we see a lot of growth in the future. So there are companies that we are constantly looking at, and the endeavor is there. But as soon as we come across material something, we'll announce and we'll let all our investors know.
Okay. And what kind of losses are there which you just mentioned?
I'll give you the details. Right now it is not handy with me. I'll have to just check. I'll get back to you in case you require the details. You can leave your mail ID.
Sure. I'll connect with you or CDR team separately for that. No issues.
Yeah.
Sure. Secondly, what is the ROEs that we are targeting in long run?
What is sorry, your voice is a little feeble.
What kind of return on equities is our endeavor to reach at in long term?
ROE is typically just a formula-based match. So I feel that if we keep on increasing our top line and we keep on increasing our bottom line, our ROE will keep on constantly going up. So that is not the lever that we are targeting. The lever that we are targeting right now is to constantly improve our top line and the EBITDA margin. We feel that if we are concentrating on the two of this, the output will eventually also help in increasing the ROE and ROCE both. So
last year for the whole year we achieved the 10+% of ROE. So this year we are expecting better than that. We aspire to achieve better than that ROE.
Okay. And just on suggestion as an investor, the order book which you mentioned, can we get a detailed breakup in terms of how much is the government order book and how much is the private order book? And within private also, how much is in India and outside India? And secondly, how much is the solutions order book and the services order book?
So typically, if you go through our earnings presentation, we have mentioned our government, non-government business, our overseas, rest of the world business and India business, the breakup is already given in terms of percentage. Even the services solution breakup is also given in. The earnings presentation is already shared. I request you to go through it. Right. After that, if you have any further questions, you can get in touch with us again.
No. That is the breakup is in terms of your revenue, right? Which is historical. What I'm asking is in terms of order book is forward-looking, which gives us an indication of how the business mix can look in coming time. So that is the reason I'm asking for this information.
I understand. Yes, I understand. It's going to be in the similar line because that is what we are thinking. Our government business is typically more to do in India, which is typically 10%, and we see that traction to go on at the range of 10 to 12%. The idea why I said to go through that is that even in the future order books, you will not drastically see something going up very fast or something coming down very slow. We want to be very predictable in nature. So yeah, there could be some percentages, but the percentage could be in the tune of if 10% is government business, it might go to 12% or sometimes 9%. There won't be any drastic changes. So by a large impact, it is going to be similar to what we have shown in the previous years.
Understood. Thank you so much. And in terms of your solutions business, is it something that you are targeting rapidly because that I think gives a J-curve kind of a traction once it picks up? And since it's a patented product, it definitely helps you open a lot of doors going forward. So what are the kind of contract terms that are there in a solution kind of a business? Is it fixed plus AMC? And if it is like that, then what is the percentage of AMC business?
So typically, solutions, what we have done is that we have divided our segments in two things, solutions and services. Solutions are the projects that we are doing one time in nature. So those could be migration projects, those could be smart city implementation projects, or those could be any one-time transactional output that we need to give to our clients. So typically, there is always going to be margin. In some cases, we will see a margin upscale. In some cases, we will see a margin downscale. The reason behind that is that in the solutions segment, we also have some product that we do. Whenever we are implementing a smart city or whenever we are doing a branch expansion for any of our clients, there is a product piece that is also a part of that delivery. So generally, as we are all aware in the IT industry, product margins are little less. And services is something which we eventually want to cater to more. So from any output or any business that we do in the solutions eventually gets converted into services. So that is what is more important for us.
So our strategy is to look into solutions like say cloud. It's all about migration, ultimately culminating into managed services. When we talk about cyber security, when we do complete consulting and analysis, it gets converted into real-time monitoring 24/7, and that's what we do, and it's coming into services segment. Smart city, when we do designing, architecting, deployment, integration, is a one-time, which gets converted into O&M, operations and maintenance. Again, it's coming into services. And software also, when we develop and implement, it gets converted into support. So eventually the strategy is to acquire new customers or new opportunities in the form of solutions, but later on it gets converted into services business.
Exactly. So AMC is what you are targeting, right?
Yeah, correct.
AMC is not the correct word, but yeah.
O&M, I'm sorry. O&M is what you are targeting, right?
Correct. Because that gives us a lot of leverage on cost optimization and steady growth rate as well.
Yeah, and it's a continuous client engagement. Okay. So O&M brings a lot of more opportunities also.
Okay. So what kind of margins do we make in O&M contracts generally, typically?
It's in the range of, you can say, around 14-15% minimum we make. EBITDA, yeah.
Okay, perfect. So 14-15% of around 85-90% of the revenue is how one can look at it, right?
Yes, absolutely.
Perfect. And one last question. What is there any working capital blockage that we find in terms of smart city contracts because they are government contracts, or are we getting timely realizations from the government?
Yeah, so nowadays the contracts are very, very lucrative. Most of these contracts are well designed, and there are milestones that we need to achieve, and payments are given on the milestones. These milestones start as an advance also. So we get an advance for doing certain work. As soon as the product is delivered, we get another amount for it. So they are pretty much easy in terms of the payment. The payment cycle is also very good. Most of the times we get the payment on time. Generally, if there is a delay, the delay is about a week or two.
To add to that, in fact, our kind of projects are not typically the construction of road and bridges sort of. It's a very niche kind of projects. So the commercial terms and conditions terms are made that way that no contractor or no service provider should be high and dry on payment side. So by and large, our payments are well within time. So you can see that our improvement in our DSO level, it is now typically it is less than the market, industry standard, you can say. So that gives that.
Right. So this 84, 87 or 90 days of debtor days will be a steady state number that one can look at, right?
That is the ideal thing that we want to create.
Okay, got it. Thank you so much, sir. Thank you so much.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. Our next question is from the line of Soumitra Joshi from Investor. Please go ahead.
Hello. Am I audible?
Yes, sir. May we request you to use your handset, please? Thank you.
Yeah. So am I audible? I'm asking you again.
Yes, sir, you're audible, but the volume is low, sir. May we request you to speak louder, sir?
Hello. Is it better?
Yes, sir. Please go ahead.
All right. So my question is very basic here. My question is, one, what has happened that last year our margins were relatively higher in those quarters of Q2 and Q3 as compared to what we are guiding for now. And the second question is with respect to sequentially now going on to Q3 and Q4 for the financial year of FY24. Do we see that the EBITDA margins will sequentially take an uptick from here for this year also?
See, the first question, your last year, that Q2 FY23, the undue little higher, the margin being on a higher side was mainly because, as we had pointed out in our investors presentation also, it was mainly on account of some reversals, non-recurring type of reversal of expenses were done in that quarter on account of couple of customers where we had made certain provisions in anticipation of some SLA getting affected, and we might have been penalized for that. So we had made certain provisions in our books, which got sorted out, and fortunately we got that money back from the customers, and that's why that quarter had a spike in margin in Q2 FY23. So that should not be taken as Q2 and 3 rather, and that should not be taken as a benchmark for our current quarters. So, but having said that, definitely Q3 and Q4 is going to be better than this Q1 and Q2, definitely for sure. So that's the thing we are aspiring.
So from EBITDA margin perspective also, correct?
Yes.
Yes.
Absolutely.
Thank you so much. Thank you.
Okay. Thank you.
Thank you. Our next question is from the line of Narendra, who is an investor. Please go ahead.
Hi, sir. Thanks for the opportunity. Am I audible?
Yes, sir. Please go ahead.
Yeah. So, regarding the big orders that you are talking about, so are those multi-year contracts or the solutions contracts? If you would focus on that.
So they are services multi-year contracts ranging from 3, 5 to 7 years.
Okay, so if we get those contracts, then we are pretty much sorted for the next 2-3 years, and the guidance that you have provided about 1,000 crores. So that is achievable. But what is...
Maybe request you to use your handset, sir. Your voice is muffled, sir. Thank you.
Yeah, sure. Hello. Am I audible now?
Yes, sir. Please go ahead.
Yeah, so I was saying that if we receive those contracts, then we are sorted for the next 3 years. But how confident are we of attaining at 1,000 crores if one or two of those contracts, fall out? So if you could.
So what will happen in that scenario? Our pipeline is absolutely strong. If not this order, we will get a next order, and the pipeline is constantly increasing as we talk. We are seeing from the last quarter call to this quarter call also, we have got a number of more large deals that we are bidding for, and the endeavor is to make sure that we keep on pursuing and start achieving those larger contracts, because that larger contracts gives a lot of confidence to our people and our investors also that we are in that virtue of attaining and going after multi-million-dollar contracts. And when I say multi-million, these are all the sizes of about 80 million, 100 million, or maybe more than that also. So if not this, maybe next order. But the idea what I'm trying to put in is that we are on the right track, and we are sure that we will be able to crack one or the other large contract.
Thank you.
Hello.
Ladies and gentlemen, that was the last question of our question and answer session. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
Thank you for your participation and engagement during this call. If you have any additional questions or require further information about our company, please reach out to our team or contact CDR India. For all of us at Allied Digital, best wishes for a happy Diwali and a prosperous New Year. We look forward to interacting again in the next quarter. Thank you.
Thank you. Ladies and gentlemen, that concludes this conference. Thank you for joining us. You may now disconnect your lines.